This content is brought to you by Link2, which makes private equity investment easy. Link2 allows you to get access to companies before they go public, before they do an IPO. Within their portfolio includes fintech companies, artificial intelligence companies, as well as crypto companies. Some of the big crypto companies in their portfolio include Circle, Ripple, Polysign, Chainalysis, Dapper Labs, Ledger, and many more. So it's a great way to diversify your portfolio to get access to equity. So you may invest in crypto, stocks, ETFs, but now you can get access to equity in these companies before they go public. And obviously that can be very beneficial from an ROI standpoint. So if you'd like to learn more about Link2 and diversifying your portfolio, please visit the link in the description.
Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Martin Bednall, who's the CEO of Jacoby Asset Management. Martin, it is great to have you on the show.
It's great to be here. Thank you very much for inviting me.
Martin, I am very excited to speak with you because Jacoby launched Europe's first Bitcoin spot ETF. That's pretty groundbreaking. And I have a lot of questions for you around that. But before we get to it, let's start with your background. Tell us about yourself, where you're from, where'd you grow up?
So I'm UK-based. I born and grew up in a place called Stoke-on-Trent that in England. I'm sure you probably don't know where that is, but I've lived in and around London for the past 30 odd years, worked in the investment funds industry for about that period of time, so too long than I care to mention. Worked for some of the big financial institutions, more recently with BlackRock in their iShares division, so ran product development in Europe for iShares, was responsible for and involved in all the ETF, ETP launches that BlackRock did over about a 10-year period in Europe. And I've been with a smaller ETF provider in Europe for a while, and then more recently I've joined, about a year ago, I joined Jacoby Asset Management, joined the founders who'd been working on this project for a couple of years prior to me joining. But that's my background.
So what's fascinating, Martin, is that BlackRock here in the United States is trying to get a Bitcoin spot ETF approved, and you've beaten your old firm at it, right? At least in Europe, in getting a Bitcoin spot ETF approved. So is that, how does that make you feel, if you don't mind me asking?
Well, we're super excited by what we've achieved, and in the launch of the listing of the ETF this week. BlackRock, their application is in the US. It's a very different market there and regulatory environment, and they're trying alongside many others to get that first spot Bitcoin ETF. It's a very interesting situation to see how that plays out over time. Here in Europe, there is existing product in the form of note structures, but we are the first fund structure, the first regulated ETF to be listed in Europe, and for us that is a great achievement and very exciting, and we now feel that institutional investors in Europe have the product that they have been looking for to get into the digital asset space.
For sure. And what was your first encounter with Bitcoin, and what was your aha moment? Given that, especially that you were from the TradFi industry.
Well, launching many ETFs over many years, you look at the various different markets and changes that are taking place in the world to see what exposures you should be delivering to investors, what exposures investors want. So blockchain investing was something that sort of came before crypto, I'd say, in terms of what we were looking at. We've looked at blockchain for a number of years now, or I have in the different roles that I've had, just to see what's the likely uptake of investing in that, what's the likely uptake of that technology. And from that, then there's the connection to crypto and looking at crypto investing, the regulations around crypto and how you can bring products to market. So I've been looking at that for, I'd say, something like 7 years. In terms of my my personal investing, I probably bought in some crypto 5 years ago would be the first time. And so it's an evolution of that. I probably
Sure.
wouldn't say there's an aha moment. It's just incrementally as you look at these and research the themes, then it just builds up. And as you understand what the art of the possible to bring products to market that are what investors want, are safe and secure, and can be built with the right infrastructure, and you sort of build on that, and you eventually get to a product that you can bring to market.
For sure. So tell us a bit about Jacoby Asset Management, the history, the services, and the type of clients that you work with.
Jacoby was founded around about 3 years ago. There was a number of TradFi and crypto guys who knew each other. They came together with the view that thinking that the products that were on offer to the marketplace weren't as regulated as they could be. And they wanted to bring a product that was really safe and secure, that, say, their father and mother, their relations could invest into, and they'd feel good about that. Now, we've got to a place where we're bringing a product to market that is for institutions and not for retail investors. But that was the journey. That was really the thought process that went into Jacoby in its early days, is really around a regulated, safe and secure product that people would feel comfortable taking to the market and allow getting investors into. And then that journey is carried on to think about sustainability and the sustainability, environmental concerns around Bitcoin in particular, around proof of work chains. And so we've put a lot of work into that, thinking about how we can make our fund as sustainable, as environmentally friendly as we can. And so over the last year, we've worked with a firm called Zumo to add the sustainable element to the fund. And we can get into more details on how that works.
Yeah. Oh, for sure. Because I noticed that for this Bitcoin spot ETF, there was a mention of decarbonization. And tell us about that. And is it like Bitcoin that you're sourcing from specific miners who use specific types of energy? Is that the gist of it?
So we don't go back all the way to the mining. So for the fund, we have what's called a scope 3 emission. So they're not our emissions, they're emissions that are associated with what we're delivering to the market, i.e. pure Bitcoin exposure. So the fund itself invests every dollar that we receive into Bitcoin. So it's a pure beta play, 100% physical Bitcoin held by the fund in custody with Fidelity digital assets, safe and secure, pure beta exposure. What we're also doing, so what Jacoby Asset Management is doing for the benefit of the fund, but not at the cost of the fund or impacting its return profile, is we will buy and retire renewable energy certificates, also known as RECs. So what these RECs are is they are the carbon attributes. It's a tradable instrument that has the carbon attributes of renewable energy. It's a market instrument. It's used by utility providers, for example, to provide you with a green energy tariff. So, for example, if you have a green energy tariff and your neighbor doesn't, you still get the same electricity from the grid. The way that your utility provider says to you that you are using renewable energy is they buy renewable energy certificates. So they've bought those carbon attributes and they're providing those to you. So what we do is, for the energy usage of the Bitcoin network that we're responsible for, that the fund is responsible for, so its holdings compared to number of coins in issue, the number of on-chain transactions we have, there's a very clear estimation of the energy usage of the network. And so we can get very confident around what our share of that is. We will buy and retire renewable energy certificates to cover that energy usage. So no matter how the Bitcoin has been mined, whether it's used renewables or not, we will still buy renewable energy certificates as though there has been no renewable energies used. So we go in above and beyond what we need to do, because we do know that there is some renewable energies used in the mining of Bitcoin. Right. And so from that, we can very clearly, categorically say that our fund has been decarbonized. It's fully used renewable energy in its operation, and there is no environmental impact. And then the knock-on consequences of that are that there's a regulation in Europe called SFDR, Sustainable Finance Disclosure Regulation, and funds, investment products in Europe, they categorize themselves under that regulations. So the best category is Article 9, and that is for funds that are doing positive things for the environment, so green tech, things like that.
That's fascinating.
You have Article 6, which is we don't worry about environmental ESG concerns, and then you have Article 8, which doesn't have environmental concerns as its investment rationale like Article 9 does, but looks at the environment and covers any environmental issues. So we've had this reviewed by Dutch lawyers. Our fund is an Article 8 SFDR ETF, and that is absolutely a world first.
Yeah, I mean, that's fascinating, and how you were able to do that and put the packaging of those two things together. And I'm sure there's probably competitors looking to do the same, but like you said, you're the first to do it. Now, the ETF trades under the ticker Bcoin. Can you tell us about the listing on the respective stock exchange, and who can start investing in through this ETF?
So the fund is listed on the Euronext exchange in Amsterdam. It's one of the preeminent exchanges in the world, not just in Europe, in terms of the volume that are traded on it, and in terms of the number of ETF listings on the exchange. So it was an obvious choice for us to market the fund, and also because the Dutch regulator recognizes so the fund is domiciled in Guernsey, which is unusual from an ETF perspective. Guernsey is a highly regarded financial services industry. The regulator is highly regarded. It's not that well known for ETFs, but we've launched the fund, we've domiciled the fund there, and the Dutch regulator recognizes the Guernsey financial regulator as an equivalent regulator. So again, that helps for us to take it to the Netherlands. In terms of who can invest in it, the fund has been designed for institutional investors, not retail. So the regulator, in approving the fund, has put that restriction on the fund at this moment in time, to say that it's really just for professional investors, institutional investors. So not for pure retail. In terms of where we can sell, we're getting expressions of interest through our website, jacobyam.com, where anyone can register their interests from all over the globe. Actually, at this moment in time, the level of interest has been far exceeding what we expected, and we are getting inquiries from the Middle East, Malaysia, and then around Europe, and so we have compliance controls to regulate all of that, but it's phenomenal where the interest is coming from.
Yeah, there's certainly a growing demand for this asset class, and especially Bitcoin. So I'm not sure how it works in Europe, but maybe you can explain it to us. I know here in the United States, let's say BlackRock gets a Bitcoin spot ETF approved, it would allow registered investment advisors around the country, wealth managers, to then be able to offer it to their retail clients. Do you think that is down the road for Jacoby and the ETF? You know, phase one is maybe institutional, but maybe you continue working with the regulators to get this to be open to retail investors as well.
Absolutely. So that is what we would be working with the regulators to to make that evolution. Regulators are conservative. They have to be. That's their job. Their job is to protect investors.
Yeah.
And in particular to protect retail investors. They're not as knowledgeable as financial professionals. So they are first and foremost in the minds of the regulators as they allow new asset classes, new products to come to market. So it's absolutely right for the regulator to take the first step to say, okay, we'll allow this, but we'll allow it in a restricted way at this moment in time. Let's see how it performs. Let's see how ensure that all the regulations are followed well, that it's well managed. So we have a regulated manager managing the funds that reports into the GFSC, the Guernsey Financial Services Commission, and they'll be. It's the first Bitcoin ETF. They're going to be all over us, and to make sure that things are working as they expected. And we will have those conversations to say, okay, look, things are going well. The fund's operating as we said it would. Let's have a conversation about how we then allow retail to come into this, because actually our fund, our ETF, is the safest, most secure, most transparent way for anyone, including retail investors, to invest into Bitcoin. The assets, the Bitcoin is held by a regulated custodian in a regulated fund structure. So traded on traditional finance exchange. It's not like trading on a crypto exchange and holding your coins on a crypto exchange, which we've seen in the past has caused investor losses.
Yeah. Absolutely. I was about to just ask you, because I noticed that you mentioned in the press release was Fidelity Digital Assets. Are they the one custodying for you? Are you sourcing your Bitcoin from them?
Yes, they're the custodian for the fund. In terms of sourcing the Bitcoin, the way ETFs operate is we have what's called an authorized participant. So they are the firms, they're the financial services firms that will interact with the fund in terms of subscribing or creating new units in the fund or redeeming if there's selling activity. So they act as the go-between between the fund and the secondary market. So anything traded on exchange, anything traded OTC. So there we have the likes of Flow Traders, Jane Street, DRW, well-known, well-respected firms that operate across the ETF industry globally. So those are the firms that will deliver the Bitcoin to our wallet, the fund's wallet at Fidelity, or we will deliver it back when they redeem any assets from the fund.
Oh, absolutely. Yeah, I mean, those are, like, to your point, those are very big names, well known in the TradFi space, and we are seeing more of those TradFi folks coming into the market and offering these services. And to your point, a lot of the startup exchanges didn't do a good job. I mean, we had epic collapses, FTX, Celsius, a lot of investors got burned. And I think now the regulators are going to come in and say, well, you need to have insurance, you need to have proper custody. All these things need to be put in order for this market to continue to grow. But great to hear that you guys are working with some of the big names.
Yeah, I mean, you don't get bigger than Fidelity.
For sure. Now, I'm going to ask you a very silly question, but I know because I saw some tweets from different people, debating spot ETFs and so forth. Your ETF is physically settled Bitcoin, right? Not paper, not like futures. To confirm,
it's physical. So it's physical Bitcoin delivered into the wallet at Fidelity on the blockchain. If you can do a spot ETF as opposed to a futures ETF, you'll do the spot ETF. I mean, that's why everyone's applying in the US for spot ETFs. There's futures-based ETFs in existence, but the holy grail is the spot ETF, and that's exactly what we've done.
Absolutely. So will Jacko be looking to get spot ETFs, given that you have got an approval in Europe, in other countries and regions? Is that, maybe part of your roadmap?
I think more likely for us to take the existing fund and future funds to distribute and list in other markets and cross list into other markets rather than set up locally domiciled structures to launch these. That's more likely to be the process. We're having conversations in Asia in terms of listing the fund over in Asia. Same in South Africa, for example, in parts of Africa. Same for Middle East. And then we've got other exchanges in Europe that we would look to list the fund on. So that would be the next phase of the development, rather than setting up similar fund structures in different parts of the world. It all depends on what's the art of the possible with this as well.
Yeah, that absolutely makes sense. Like, certainly getting on the Hong Kong Stock Exchange and some of these others, right, will be really big. And on that note, obviously you just kicked off the Bitcoin spot ETF. So I don't imagine you're going to be looking into altcoins, but let's say a year from now, will you be looking into an Ethereum spot ETF or an XRP spot ETF or whatever, altcoin basket ETF or whatever it may be?
We've absolutely got a product pipeline that we're looking at, researching, and trying to understand what's the next exposures.